Take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the markets, how BTA analyze the markets, but nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We're looking at a daily chart of the Dow Jones Industrial Average, the actual index itself. And what I wanted to talk about now is the fact that the rally is dead. Okay, we had our follow through day, but the rally is dead. The market is back in a confirmed downtrend, confirmed correction, and the bear market continues. All right, we had our relief rally after the follow through day, got a little pop. We went into consolidation sideways for almost 10 days, 8 to 10 days. Let's see, 2, 4, 6, 8, 9 days. And then it fell apart. But we warned you of this. We told you it was a cloud overhead. We warned you that was a cloud overhead. We warned you of the 50-day downward trend and 50-day moving average acting as resistance over top. The 13-week moving average, the 8-week moving average, lowest. We talked about all these things in the previous videos. So we warned everybody. But this right now, this is about the fact that the rally is dead. Okay, well, this is the Dow Jones, like I said, daily chart of the Dow Jones Industrial Average. Now, this was our first day rally attempt. Okay, we never actually got a follow through day on the Dow Jones. That will give us the green light to start buying leading stocks and leading industry groups, breaking out of sound base patterns. We never got it. Okay, but when you undercut the low of the first day rally attempt, so we had a downtrend, okay, a correction. We had a first day rally attempt. Okay, right here, the market, the Dow Jones traded up to this downward trend in 50-day moving average, strong overhead resistance. Okay, we pulled back, we went into consolidation sideways, and then we fell apart, broke down out of the sideways consolidation to the downside. Okay, and now we have undercut the low of the first day rally attempt. So now the rally is dead. We're back in correction. We're back in confirmed downtrend. We're back in the bear market, all right, phase. So now let's look at the Standard & Poor's 500, the actual index itself. Okay, this is the Standard & Poor's 500 here. All right, now I'm going to expand this a little bit this time. Okay, because I want you to be able to see this clearly. All right, so let's get rid of this. Okay, so here was our first day rally attempt right here. Okay, we was in our downtrend. All right, we got our first day rally attempt here. You ignore day 2, ignore day 3. All right, we start counting from day 4 and beyond. So this was day 4. But it was an up day, but the volume was lower than the previous day. The percentage change wasn't enough, so that wasn't a follow-through day. Well, on the 5th day, right here, is where we got our follow-through day. All right, we had an up day with higher volume than the previous day. This volume was higher than the previous day. And the percentage change was really big. It was more than the 1.25% minimum that we need to get a follow-through day. So this was our follow-through day. We actually made some trades and we got a quick pop, but then guess what? The market moved sideways. All right, so this is a daily chart of the Standard & Poor's 500. So the market moved sideways from there. But after we got the follow-through day, within 2 days after that, look at this large distribution day. Higher volume than the previous day, a down day with higher volume than the previous day. At that time, we put out a video stating that the market, the follow-through, they had a 50% chance of failure, a 50% chance of failure. Because anytime you get a distribution day within 2 to 3 days After a follow-through day, that reduces the chance of success of the rally holding and moving up higher. That reduces it by 50%. So we had a 50% chance of success, and we told y'all that in the prior videos, right? Right when we had the distribution day. We started moving sideways, consolidating sideways, as you can see here, and we had that downward trend in 50-day moving average, okay? But now, when you undercut the low of the follow-through day, we also told you if we undercut the low of the follow-through day, then that would make it a 90% chance of failure. So here I just put a horizontal line, all right, a horizontal line right across the low of the follow-through day, right here, okay? And as you can see, this is the low of the follow-through day. I just put this horizontal, yellow horizontal line right across the low of the follow-through day. And as you can see on last week, Friday, this day right here, we undercut the low of the follow-through day. That increased it from a 50% chance of the rally failing to a 90% chance of the rally failing. Now, today, we have undercut this horizontal line right here. It's right at the lows of the first day rally attempt. Today, we have undercut the low of the first day rally attempt. The rally is now confirmed dead. So the 50% chance of failure, then it went to a 90% chance of failure. Now the rally is dead. So the rally is dead now. So we're now back into a confirmed downtrend, back into the correction. The bear market has resumed. Okay. We are back into the bear downward trend. Now, this should not have came to a surprise to anyone. We did several videos telling you to be careful, watch out, overhead resistance, 50-day moving average, 8-week moving average, 13-week moving average, several overhead resistance area, key overhead support, horizontal resistance areas that was previous support. We did several videos explaining this, and we told you if this thing break out of this consolidation, we told you the high point and the low point. And if it was going to break out to the upside, we wanted to see volume coming in. But if it break out to the downside with increasing volume, we told you, you may come back and test these lows. And now today we have come back and test these lows. Now look, I know people saying, well, it's the inflation numbers. It's the CPI. It's this, that, and the third. A lot of different, they're always going to give you a reason why something is happening. But we saw it coming way before that. Okay? We saw it coming a long time before the CPI numbers came out. The charts was telling us that something was wrong. Do we actually have a crystal ball? Okay? I told you, sometimes it seems like we have a crystal ball in the palm of our hands. It almost seems as though we can see the future. But let me stop. And the bottom line is that we saw it coming. The charts is going to tell you. We told you that this thing was moving sideways. Okay. We was having up days on low volume. It was moving sideways on low volume, coming to overhead resistance. The on-balance volume line was breaking below its previous highs. The Ichimoku cloud was telling you it's a cloud over our head. Was it a storm coming, or is it going to be a hurricane like Jamie Dimon? Look, we talked about the inflation numbers. Okay, yes, everything is inflated. Inflation is running rampant. Interest rates are going to the moon. Right, we know about all of that. But at the end of the day, the charts was telling us way ahead of time that things was not looking right. So the rally is dead. And notice the volume. Notice the increase, stair-stepping increase of volume. Look at how the volume was at average, above average, higher than the previous day on the down days. And on the up days, on the green days, we had low volume. It was telling you that large institutional investors were not buying into this thing. The unbalanced volume was telling you that. So now the rally is dead. How low can it go? Well, we're going to analyze the charts, and we're going to see when we start to see downward, some momentum coming in, and the downward momentum slowing and things of that nature. But we have to analyze the charts now to see. Okay, look at the QQQ. This is the actual NASDAQ itself, the actual index itself. Same thing. We have now undercut the low of the first day rally attempt. We did not get a follow through date on the NASDAQ. Okay, but here's the first day rally attempt. Today, we got a horizontal line going right across the lows of the first day rally attempt. Today, we undercut that. We told you when you got distribution coming in, the Standard & Poor's had a follow today. You started seeing distribution on the indexes within 2 to 3 days after that with a 50% chance of failure. Once you undercut the low of the follow through day, it increased to a 90% chance of failure. Well, now today it has failed. All right. So the NASDAQ has undercut the low of the first day rally attempt. We now have to look for a new first day rally attempt and start the count all over looking for a follow through day. Okay. Which is going to give us our green light to start buying leading stocks and leading industry groups, breaking out of sound base patterns. All right. So now let's look at the IWM real quick and then we'll end this. Okay. Because this is all about the fact that the rally is dead and the count. It's very important that y'all remember this because this is a very important technique that tells us when we should start looking to get back into the market. So listen, we traded down hard for the last 3 or 4 days. Yes, CPI came out. We had some real bad numbers with the consumer sentiment on Friday. All right, right after the CPI around 10:30, consumer sentiment came out. Of course, the sentiment is bad. People are getting killed at the pumps. Okay, gas is through the roof. Food is through the roof. Housing is through the roof. The rent is too doggone high. People getting killed out here. Inflation is real. We don't need them to do a survey to tell us that the consumer sentiment is bad. We're living in it. We know it's bad. Okay, here's the downward trend of 50-day moving average. We moved sideways, consolidated for 8 to 10 days. Here's the low of the first day rally attempt. Well, Friday when the numbers came out, consumer sentiment. Well, first we had the CPI, then we had the consumer sentiment came out, and then boom, it traded down real hard right around 11:30, 12 o'clock. And then it gapped down today, broke below the low of the first day rally attempt. The IWM first day rally attempt is dead. The count is dead. Now we have to look for a new first day rally attempt, start the count all over again, look for the follow through day, a strong up day on a good volume, high percentage gains, and then that's going to give us our green light to start looking for leading stocks and leading industry groups, breaking out a sound base pattern. So what are we to do now? Analyze the markets. Look for the bottom or look for the continued follow through to the downside. Look for the follow through day, the first day rally attempt. Compose our watch list. Get ready. Look, I'm not giving financial advice here. That's understood. But if you were paying attention to anything that we were saying, this downtrend with this sell-off over the last 3 or 4 days would not have caught you as a surprise. And I know I've gotten a phone call or two today from people who actually made a lot of money over the last 3 days. I'm so happy for you. Okay, this is not financial advice, but wouldn't it be wonderful if it was? Okay, but it's not, right? I cannot give financial advice. We are not licensed. We are not financial advisors. I'm only here to tell you what we are doing. And what we do is successful. Okay, look out for the next couple of videos. We're going to be talking about walking with the market. We're going to do some breadth analysis. We're going to analyze the last couple of days of trading. And we're going to see if we can see a bottom. We're also going to be doing a couple of updating the watch list, getting our watch list together. And hopefully before the new first day rally attempt and the follow through day, I'll put out a list of the stocks that we're looking at. Okay, to our members on the website, browntradingacademy.com. All right, so look out for the next couple of videos. We're going to be analyzing, we're going to be walking with the market. Okay, we stay in step with the market. We don't want to go before it. We definitely don't want to be too late. But we just want to be on time. And we're not trying to get the first dollar. And we're not trying to get the last. We just want to eat off the middle. See you in the next video.